Here's something most traders never want to hear, that the entry is actually the easy part. Everyone spends all their time on it, their indicators, trying to find the perfect level, trying to get in at exactly the right price. Then they get filled and they have no idea what to do next. So they watch, they hope, and they let the trade decide the outcome for them. That's what today is about, trade management. Everything after you're actually in the position. And by the end, you'll have the complete framework from entry to exit, Chef.
Buddy, when I started, I was exactly that trader. You know, I thought if I just nail the entry, the rest will sort itself out, you know. Took me way too long to work out the entry is maybe 20% of it, I think. Yeah, so I know.
Absolutely. It's definitely a bit of a rude shock, isn't it? You think, all right, I've got the entry, it's all easy now. It's actually quite the opposite. So, mate, let's tick it along. Let's tick it along. So, your entry might decide whether you get a good price, right? But the management decides whether you actually keep the money or not. A good entry managed badly is still a loss, right? And an average entry managed well can actually be a really nice winner. So what I'm saying here, Bogdan, is the management is what determines whether you win or lose.
Exactly, buddy. Exactly.
All right. So before we get into it any further, just a quick note that this is for educational purposes only. It's not financial advice. So always do your own research, manage your own risk. All right, Chef, let's get into it, mate. Let's get started.
Let's go, buddy.
All right. So the moment you get your order filled, your job changes, right? Before the entry, your job is to find a valid trade. After the entry, your job is completely different. Now you're actually a risk manager, right? You're not predicting anymore. You're not trying to take educated guesses on where the market is going to move. Now, all of a sudden, you're actually protecting your position. So the management plan is not something that you make up while the trade is actually live. It's decided before you ever click a button. Your entry, your stop, your target, where you take a partial profit, the rule for when you move and how you move to break even. All of this is part of the setup, not the trade, but the actual setup at the start.
So you are saying by the time you are actually in the trade, all the decisions are already made?
Yeah, because the second you're in, you start to get emotional, right? The emotions show up, and that's the worst time to actually be making any decisions. You know, so you want to get in early, make those decisions before you start getting emotional.
That's actually take a heap of pressure off, you know. If the plan's already written, you are not sitting there sweating every candle trying to decide what to do next, you know.
Yeah, man, like how many times do we say this in the community, that a managed trade is boring, right? Trading is boring because you wait for your entry patiently. You get in a trade you've already pre-planned, right? It's boring, right? There's no, you know, because you're calm. If there's any drama, it's because you didn't have a plan, right?
Yeah, and how we say all the time, boring is good. Boring is good, but
yeah, exactly. So once you're in an actual trade, you're not a trader anymore. You're a risk manager because you're executing a plan that you've already written. Right?
Exactly.
All right, mate. Let's move along. So now we're going to move into the first of the trade management tools you're going to use, and this is called the break-even move. Now, the break-even means moving your stop up to your entry price so that the trade will no longer be in any kind of risk. So the worst case is you get out at entry, you're flat, you've lost nothing, you've made nothing, right? Sounds great, a risk-free trade. But here's where almost everyone actually gets it wrong. They move to break-even way too early, right? Price ticks a little in their favor. They get nervous, they shove the stop loss to entry, and then normal pullback lips their stop loss. And then guess what happens? The trade then goes back up in the direction they want and goes on to hit their TP after they've already been stopped out of the position.
Sorry, buddy, but I'm laughing. Not that more times than I want to admit, you know. You get a couple of green candles, you protect it, and then it stops you out by a few dollars, you know, and goes exactly where you're supposed to go, you know. That oh my God, I know, buddy, I know. That's one thing, because you are right, and you still lose it, you know, you still lose that trade.
Absolutely, man, absolutely. Like, I mean, we've done it thousands of times probably, you know, over the years. So what we've got to do now is we've got to actually come up with a rule where the trade earns the right for you to move the stop loss back up to entry, right? So that's what we need to do. So getting stopped at at break even too early isn't actually the market beating you. It's you actually beating yourself, right? You're psyching yourself out of the position. So the rule needs to be simple. And like I said, it's where break even is now earned, not given. But what you do is you don't move your stop loss because you feel nervous. You move it when the trade has actually proven itself and it's reached a defined milestone, right? So for example, it's reached its first target zone. So that way the structure has generally shifted. And until then, you need to keep your stop below that level that you entered and below the point at which invalidates the trade thesis.
So the trade has to do some work before it earns the protection, no?
Yeah, man. So here's an example actually of a current render. This is a current render position. Okay, you can see here we had this beautiful little reversal. Okay, and then it had this little flag that it performed, and then it's broken out of this flag. Okay, now what happens is this particular position here now it's at break even, right? But what we did was we waited for price to clear the first level. So this is the TP1 level. We waited for price to clear the TP1 level. Once it cleared this milestone, then stop was able to move up to entry. So it has earned the right. It's put in a higher high. It is back on the uptrend again. It's put in a higher high, higher low. It's broken through the level, another higher high. Stop gets moved to entry, and away we go. So that's an example of the break-even protocol, where you make the trade earn the right to get moved into break even.
I set up it, yeah, exactly.
Yeah, and if you think about it as the trade has to earn it, it kind of, for me, it changes my mindset a little bit. I want to make sure this trade has earned itself to the first key level. And for me, mate, and this is just a personal preference for me, is that whenever I move my stop loss to entry, I also take a little bit of my position away from the trade as well, because I like to have the feeling of a completely risk-free and slightly profitable position. It makes me feel good because we do a lot of setups. A lot of the setups we look at and we wait for never actually happen as entries. We never get the entry because they don't form the way we want. So when we do get the opportunity where the trade does earn itself the right to move to break even, I like to also reward myself with a little bit of profit taking at that point as well.
Exactly, buddy. Exactly. And I'm doing the same. You know my trading style. So because we learn on the hard way in the past trading with only one take profit and never go there, and we make round trips. So yeah, I totally get it, buddy.
No, man, it's the best way. And that leads us into this particular slide we're going into now. And that is that, you know, we have a rule that we're trying to get our community to live by religiously as well. And that is that we never close a trade all at once. Like we never get in it and we ride it all the way to the finish and never take profit, right? Because like the live example you deliberately showed last week in our community was you deliberately round trips and positions, and you showed that you gave back $600 in profits by getting your beautiful entry, but then not being the risk manager and just letting it go. Right? It was a very, very valuable lesson for people to actually witness that live.
Yeah, buddy.
Yeah. So, you know, the rule that I use, like I said, is we take partials. We never let it ride all the way through. And this actually changed a lot for me, right? The partial exits, the scaling out of positions. It's where, like, typically most traders bounce between two different mistakes, where they either close the whole position, you know, the second that they're in profit, and cap every winner to be really, really small because, again, their head gets in the way and they're like, oh, I'm in profit, I better get out, you know. Or they hold the thing way too long and they never take any profit, and then they either hold it past their target as well because they get greedy, or it gets just before your target and reverses on you, and instead of closing the position and doing some analysis, again, they say, no, it'll get there. And then what happens? It comes all the way back, and it rides it all the way back down to the entry and beyond, if they haven't put in any break-even protocol in there as well.
Yeah, buddy.
Yeah. So for me, it's like, you know, take a portion off at the first target. That banks real profit. It takes the risk off the table. It kills the pressure. So then all of a sudden, oh man, like it's a profitable trade, right? It's a win. You know, in sport, you don't have to win. The World Cup's on at the moment. You know, a 1-0 win is the same as a 5-0 win, right? A win is a win. So we'll take it. It still counts as a win. You move up your group standings a little bit, whatever, right? So we'll take the win. And, you know, the rest you let it run to your target, leave a little bit behind, let it run to your target, because you're guaranteed of a win.
Yeah, buddy. That actually change my trading, you know. Once I've got some profit lock in, stop micromanaging the runner, you know. Before partials it glued to the screen, you know, I stay there, white knuckles, trying to pick exact the top body. After partial and relax, I'm ready to on the trade, you know. The runners just upside, and that's it.
Yeah, man, that's it. And what we're doing here, mate, as well is, and what we do with our community is, we're not handing them a fixed formula. Like, we're not saying you must do this and this. We're just saying that how much you scale and where depends on you and your plan and your own appetite, if you like, for want of a better word. So for me personally, I'll typically take 50% of my trading position away at my first TP, right? If my first TP is only gives me like a 1-to-1 risk to reward ratio, I may pre-plan to take only 25% of my position away at TP1 and leave a bigger chunk. But that's my own thing. So we're not going to tell you what you need to do. We're just saying that this is the way that we do it, and it really helps us psychologically to manage the rest of it. It's the principle behind the idea that really matters, right? Bank a portion of it at a defined level, protect the rest by moving your stop loss up, and then let the rest run. Yeah.
And you will decide all of that before you are in, you know, in same as everything else, you know.
Man, yep, same as everything else. The partial levels were part of the plan, you know, not a decision that I made in the heat of the moment. All right, buddy, let's move it along, mate. Let's move it along. So then we've got, you know, the issue of two problems here, and that is that there are, you know, the first one is the trade starts going against you. Price is heading for your invalidation level. And here's the single most important rule in this entire video is that you do not move your stop to give it more room. Ever. You never move your stop to give yourself more room. If price breaks the level that you made, that made the trade invalid, then the trade is simply wrong, right? It's not unlocked. Yeah. It's not unlucky. It's just wrong. And as you know, mate, you know all too well that is just trading, right?
Oh yeah, buddy.
So you take the loss on the chin, as they say, exactly where you defined the trade to be invalid. You just take it on the chin. Because if you start widening a stop just because you don't want to be wrong, and that is the fastest recipe to blowing up an account, right? The stop must be sacred, yeah?
Yeah, buddy. And that's a hard one emotionally, you know. In the moment, moving the stop feels like you are just giving the trade a fair chance. It feels reasonable, you know?
It feels very reasonable, and that's exactly why it's so dangerous, because a small defined loss is part of the system, right, which you've pre-planned, versus a widened stop because you're emotional, is how a small loss turns into one that takes months and months and months to gain back, if ever at all. Some traders capitulate at that point and never trade again. So the second version, mate, here is the one that needs judgment stalling, right? The trade isn't going against you, but it's not working either. It's just chopping sideways, momentum's gone, time's passing by, and the trade just isn't doing its job.
So how do I tell the difference between a trade that's stalling and a trade just taking its time, you know? How we make this difference?
Yeah, so they look the same in the moment, and the test is the reason you entered, right? Is the thing that made you take the trade actually still there? Does the reason still stand? Momentum, structure, you know, is the setup still valid? If yes, just give it more time, right? But if the reason has quietly disappeared, and now it's just drifting, I mean, that's a stall, right? And a stall isn't a panic signal, it's a reassess signal, right? So you can hold on to your original stop and let it play out, or you can just decide to scratch the trade. Close it at around break even, you free up your capital, and it allows you a bit more risk now that you can go and put into something else. It also allows you your mental attention to move into another position. You can start looking for a better setup somewhere else. Because money tied up in a trade going nowhere can't work somewhere else because the money's tied up in this trade that's going nowhere, right? But that's opportunity cost, and that's actually real. You know, I kill trades all the time partway through, you know, all the time.
Yeah, but
in fact, if I'm sorry, mate, I know you've got something here, but if I see a trade that's still hovering around break even 15 candles after I enter, I will generally just kill the trade. You know, so if I'm on a 1 hour chart and 15 candles later, so 15 hours later, I'm still hovering around entry, I'm just going to kill it no matter what.
Yes, buddy.
I don't want to think about it anymore. You know?
Me, I was that guy. I didn't kill it in the past, but now I learned my lesson the hard way.
Yeah, man.
So buddy, so against you, it's mechanical, The stop just do the job, Stalling is where they actually have to think, in my opinion.
Yeah, perfectly put, mate. Definitely. So against you is where the rule just decides, right? That's why we have a stop loss. It's a safety mechanism. That's why it's there. Great. You got it wrong. Cool. No problem. And then, stalling is where you decide. But you decide against your plan, not against your feeling. That's the hard part.
Exactly.
So yeah, let your stop do its job, and that's fine. That's absolutely fine to let it do its job. But if a trade is stalling, you then need to reassess it against your plan and not against your fear.
Exactly. This one is the most important.
Absolutely, man. Absolutely. So we're going to talk about, entry to exit in one flow. So before you enter, the whole plan is written like we said. Entry, stop, validation, your first target, where you take your partials, and the milestone that you need before the trade earns the break-even move, right? That's your setup. Then you enter. Once you're in, you manage it by rules. The trade proves itself and reaches the milestone, right? This is when you move to break-even, and the risk is off. For me, I take a little bit of profit, move to break-even, winning trade, risk is definitely off. My mind is calm. Price hits the first target. Like I said, you've done your partial. The runner keeps working, right? And if it turns, and it turns against me, the stop just does its job. There's no negotiating. If it stalls, I just assess my original thesis and I either stay in it or I just kill it. Either way, at this point in time, I've already banked profit. So it's already a winner. So again, I have the ability to remain calm. And that's it. Notice what's not in here, mate, as well. Notice what's in here. There's no hoping, no guessing, no staring at the screen. Every single decision made before any emotion arrives.
Buddy, this framework changed my trading more than any entry signal ever did, Learning to manage the trade, it was made me consistent. The entries were never really my problem, it was everything after, buddy, everything after.
Absolutely, mate, and that's the whole lesson, right? And that's most people, right? That's exactly why we built the whole system around it. It's literally our name, right? Trade Management Mastery, right? So if you guys out there want to go deeper into this is lesson 6 in our free complete crypto trade management course. And what this does is this maps into dimension 6 inside our mastery hub in the community. This is our own standalone learning and tools platform that our community has access to. And this video is just the overview. The course is the detail, right? And if this helped, definitely subscribe to the community. There's a link in the description. So the rest of the course comes to you. And then you can drop a comment telling me which part of managing the trade you find the hardest. Bogdan and I look at all the comments. So please drop a note in there. Tell us what your common problem is that you face. Also, the full playlist of all of these other sessions are in the description as well. So go in there and check it out.
Yes, exactly, buddy. Exactly. Check it out. And if you are struggling with trading, again, link in the description. We have a very beautiful community. Everybody's there to help you. So we create families, not only communities.
Absolutely, mate. And currently we're doing something brand new as well, right? We're building our own strategy as a community together. The community is deciding on the timeframes. Tomorrow night, we're going to be discussing how to read the market context. We're going to decide as a community what things we're going to look at in order to determine the regime of the market. And we're going to start building it over the next 6 weeks, and then we're going to trade it exclusively in the community. We've already decided on 2 tokens. We've decided on the timeframes. It's not too late to take part of it. Like I said, link in the description, join the community. You get a 7-day free trial. So check it out. You'll get to see some of the strategy building in place. Also, make sure that you do follow our socials as well. We've got our Twitter handles in the description, so give us a follow. Bogdan, lots of love, buddy.
Thank you, buddy. See you next time. Bye, guys. And again, link in the description. And thank you for the love you sharing us, and our community even here on YouTube is growing very fast. We didn't expect it, and thank you for that, guys. Thank you for that.
Thanks, bud. See ya.
See you, buddy.